Hey guys, it's Sasha. There is no company out there that divides opinion quite like Palantir. They only listed on the New York Stock Exchange in September, and it has become incredibly controversial because they provide software and solutions to the US government, army, and various agencies, including the border authorities. And there are those who say they are unethical because their tools are used to identify illegal immigrants by the CIA. And from a pure investing perspective, they look even worse. The company has never been profitable, and its losses have been growing to a loss of $1.2 billion on a revenue of just $1.1 billion in 2020. That is a negative profit margin of over 100%. That's not a great starting point. Even worse than that, the CEO of Palantir, Alex Karp, has recently been selling millions of his shares worth hundreds of millions of dollars. So why would anyone think that this is some kind of great investment opportunity? Well, let me tell you my view, but just before I do, a brief disclaimer. I am not a financial advisor. I can't provide financial advice to you, and if you do need financial advice, please go and seek the help of a suitably qualified professional. And I am also invested in Palantir and hold a long position, just for full disclosure. Now, let's look at Palantir's financials first, because that is the most important bit. I've got them here. In Q1 2021, Palantir made a loss of $123 million on revenues of $341 million. And it looks particularly bad because in Q1 2020, they only lost $54 million on revenues of $229 million. So the gap seems to be widening. Palantir's share price, as I'm recording this video, is about $23, which puts their market cap at around $43 billion. That valuation seems very steep given the numbers that I just quoted, but here is what you really need to know about their numbers if you dive a little bit deeper. In Q1, Palantir spent $136 million on sales and marketing. And this is a huge number, but here is why I think it is really good. Palantir is not a retail business. Money spent on marketing in Q1 of this year doesn't drive revenue in Q1 of this year, like a typical retail business would. Palantir provide technology, solutions, consulting, and analytics on long-term projects that stretch for months and in some cases years ahead. In the whole of 2020, Palantir earned just under $1.1 billion in revenue. But at the end of 2020, they had a $2.8 billion pipeline in total deal value. That is where the secret is. This is the number of deals that they have already signed, but haven't yet completed and haven't yet had the opportunity to bill for. So this is money that is pretty much guaranteed to be earned at some point in the future. The average contract duration of these signed deals at the end of 2020 was 3.6 years. Now, if you divide that to get a rough estimate, they already have $780 million revenue in 2021 alone, or possibly higher if some of this money is front-loaded. That's about 71% of their total take in 2021. Already, that is incredible. But what is even more incredible is that just 3 months later, at the end of Q1 2021, that same number, the total deal value, hit $5.4 billion. That is almost double, and that is almost 5 times the revenue that was generated in the whole of 2020. And the cost of getting that extra $2.6 billion worth of new business? Well, it's the number that we just looked at. It's that $136 million spent on sales and marketing in Q1, plus possibly some of the general and administrative costs. That is really quite good, but that is not even the best bit. Palantir have just launched their new product called Foundry, and this is big. This is really, really big. This is a huge modular data analytics software that provides live results in a simple no-code required interface for companies to use. This is something that is already being used by the likes of Airbus, Ferrari, and some of the world's largest energy companies. This is a tool that can tell you the specific aircraft part that is going to fail before it fails, based on the live analytics of all the different sensors that exist on an aircraft that combined go and feed it information that says that some component may well be reaching the end of its useful life, and that component can then be repaired or replaced at a much lower cost than if it was to fail, with much less aircraft downtime. These kind of solutions are incredibly valuable to the companies that are purchasing them, and it is a tool that can optimize large-scale manufacturing to a point where you can save 40% of the time it takes to build an aircraft just by optimizing it using their tools. And for those like me who are invested in the company, the beauty here is this is a tool rather than a provision of consulting services. It of course requires a lot of manpower to go and set it up and operate and integrate with the various services, but it requires far less people hours than pure consulting or more manual analytics projects. And that means that it costs far less to generate the revenue except for the sunk R&D costs. So let's talk about value. Technically, Palantir made a loss, but in 2020 and in 2021, Palantir has given out a load of stock-based compensation to its team, including its CEO, and sunk a huge amount into R&D. If you add back the stocks that they have paid out and the associated taxes, then their operating margin is 34%. That is very, very healthy. And if I then go and take out the remaining R&D costs and the remaining marketing costs, I get a net return of about 255 million in Q1 on revenues of 341 million, which is insane because those R&D costs and that marketing cost is buying tomorrow's business rather than servicing today's. And here we have a company that is growing at a rate of about 45% per year, a rate that might accelerate as the Foundry grows and develops, that is literally sitting on huge piles of cash. They have $2.2 billion of cash at the end of March 2021, with total liabilities, current and long-term, at $1.2 billion. And the business that they have already booked is equivalent to revenues of about $1.46 billion per year, with a free cash flow margin of 44% and an actual real in-year business operations margin, if you like, that I just showed you of about 75%. We're talking about a young company that is literally staring at over $1 billion in clean cash coming in over the next 12 months based on this calculation. For me, a 40 times multiple on this number is personally extremely low. Palantir is one of only 4 companies that work for the US government and Department of Defense at impact level 5 that allows them to work on restricted systems. And 3 months ago, they confirmed that they're working to become the only company certified to operate at IL6, which deals with classified data. And if that happens, this basically opens up a gateway to running the systems, data processing and analytics for all US agencies, federal and local governments that require this kind of level of information security. For anyone wondering, companies like Oracle, Salesforce and SAP are at level 4, while Google and Snowflake are at level 2. So there's a big, big difference. And for any company that's providing consulting and systems, governments are the holy grail. Once you build the systems and then have them integrated and used by entities like governments, it is incredibly difficult for those systems to then be replaced by a different provider, which means the pipeline of work and the renewal of contracts are likely to just keep on going and to keep on growing. Now let's talk about the issue of Alex Karp, the CEO, selling his shares, because the media went crazy when that was reported. In October, he sold 11.5 million shares for $111 million. And since then, he's been regularly selling shares in installments every month. He recently sold over $100 million in April and $80 million in May, but here's the bit that the media who were reporting this didn't really mention. Alex Karp has 60.9 million stock options that were granted to him in 2009, with a strike price of just 10.3 cents. This is on shares that are currently worth $23. And he had another 8 million stock options granted in 2011 with the strike price of 85 cents. And all of those expire on the 3rd of December 2021. So in just a few months' time. And given that the price of shares is now so much higher, that means that at the point when he exercises those options to get those shares, he has to go and pay a huge tax bill when that conversion happens. A tax bill that will be measured in hundreds of millions of dollars. And in order to pay the tax bill, anyone who has that number of options will have to go and sell some of them in order to pay for the tax, which is exactly what he's been doing and saying he's been doing while converting his options into shares. But if you look at the more recent filings, for example, the one on 21st of May, he's actually been keeping some of those shares. So he specifically kept 1.9 million shares that he exercised as an option conversion, and he didn't sell them while selling others. So this really does seem to confirm that the reason for the sales is tax, because he is beginning to keep some of those options, and we're going to be seeing a lot more of this in the coming months. But let's come to the question of ethics, because some people have questioned Palantir on this front. Now, this is one where I may have somewhat of an unpopular view, but Palantir is providing providing tools and software to US governments, and it is then the US government who decides what to do and how to go and actually make use of those tools. However, I do hear the counter argument, which says that just because you only sell the tools, if the person buys those tools and then there's something that is kind of morally wrong, then you are sort of in some way liable or culpable. But here is my take. I completely do hear that argument, but this is a data systems business. And the primary buyer that people have a problem with when they talk about ethics is the US government. And putting politics aside, the US government is a far cry from drug cartels or dictators killing hundreds of thousands of civilians. Now, some may disagree with some of these government's policies, whichever government is in power and whichever side of the fence it is that people sit on. But the issue for me here sits with the government, not with Palantir, because they provide services that span different administrations, they span different policies and fast-changing policies, and they provide services over the course of many years. And the policies that the governments implement, whether it's to do with immigration, whether it's to do with deportation, whether it's to do with their military, will be enacted whether Palantir chooses to supply the services to them or not. Now, I personally don't think that making the technology supplier culpable for policies that you don't agree with is fair in this particular case, but I do see why some people may disagree. But that is why you need to go and make your own investing decisions based on your own principles and your own ways of looking at things. And you need to go and do your own homework, and you need to go and double check any numbers. I might be wrong, I might be a million miles off, and absolutely anything can happen in the future. So thank you so much for watching. Go and do your own homework, and I'll see you guys later.